The stock market can be unpredictable, and there are times when it faces significant downturns. If you find yourself worried about your investments during such a period, it's essential to take a step back and assess your situation calmly. Remember, market fluctuations are a normal aspect of investing, and addressing your concerns with a strategic approach can make a big difference. Firstly, it's important to evaluate your investment portfolio. Review the assets you own and consider whether they align with your long-term financial goals. Diversifying your investments can help mitigate risk. If your portfolio is heavily weighted in a sector that is currently struggling, it might be worth exploring other industries or asset classes that could provide more stability. Next, consider your investment strategy. If you're following a long-term plan, short-term volatility may not require drastic changes. Staying the course and avoiding panic selling can be beneficial. Historically, the stock market has tended to recover over time. Patience is often key, and maintaining a disciplined approach can lead to better outcomes. Lastly, educate yourself about market trends. Understanding economic indicators and global events that influence the market can empower you to make informed decisions. Stay updated with credible financial news sources and consider talking to a financial advisor if you feel uncertain. They can provide personalized insights and help you navigate through challenging times more effectively. In conclusion, when the stock market isn't performing well, take proactive steps to safeguard your investments. Evaluate your portfolio, stick to your long-term strategy, and continue educating yourself. With the right approach, you can weather the storm and emerge stronger on the other side.